In this video tutorial, you will learn everything you need to know about swing trader. First of all, I'm Alvaro from Trading HT. Remember to subscribe to our channel if you like this type of content, and also remember to see the disclaimer right here because we're gonna tell you a lot of things, but it's our opinion, of course. First of all, guys, you want to study a stock for swing trading. The first thing that you need to pay attention to is maybe a step for cryptocurrencies, but for stocks, the fundamentals play a key role right here. So first of all, I'm gonna load the net income right here, and you can clearly see right here in the upper area the price action and below the net income of the stock. So obviously you can clearly see from the chart there's some sort of correlation. Why? Because when the stock is, when they release an earnings every quarter, if we get like a worse data than the previous one, the price tends to react badly. And this is what we're watching right now. It's like every time they release an earnings, it's like it's worse than before. And the stock, even though there are some sort of rebounds, smart investors, they don't tend to follow stocks that perform that poorly. They tend to prefer like the opposite, like stocks with earnings and net income every time that better than the previous one. This is what we're watching right here. And this is one of the maybe biggest mistakes by traders. There are a lot of stocks where you can clearly see this. I'm gonna load some examples so you can clearly see the difference. Let's load Nvidia. Here we have an example that happens. It's happening the opposite, and look at what happened with the price action. It's like it went up. So sometimes it's as simple as this. Even you don't want to recognize it, and you don't want to see the reality. The reality is that the price action is related to the net income of a stock. You can analyze other, EBITDA, revenue, but for me, it's like personally, the net income is the true one. We're talking about if it's making money or not out of the, of the business. Another key factor is the support and resistance levels. Here we are talking about more like technical analysis stuff. It usually works, but it works only, I would say, if we have the net income, or at least like a better perspective. If it's trading sideways, it can happen. If it's going like down, like Blue Power with a negative net income every time, it's gonna be difficult to see like a rebound going to make new highs. It's gonna be difficult, I'm gonna tell you. So for Nvidia here, we have like a support level that is clearly visible from the area, even channels. It's like we have different patterns available. We're talking about support and resistance levels, but channels tend to work the same. So obviously, it's very simple. It's like you tend to minimize risk when you try to buy the stock at the bottom, at the support levels, and the resistance levels are the ones that are in the top. So for instance, here we have a channel on the left. Let's analyze it more closely. And here at the top is the resistance level. At the bottom is just the support level. So obviously you buy at the bottom. Every time we see some sort of a correction, you buy right there, and the risk is automatically minimized. Even though it kind of work every time, but the thing here is like you minimize the risk, and you obviously have to analyze other factors such as the fundamentals, or even the forecast, or the business itself. But obviously the support levels and resistance levels, it helps. And then there is another indicator, or two indicators actually, that are very useful to combine with support and resistance levels. We're talking about the MACD and the RSI. And you may think, okay, oh, that's very simple. Everybody knows to use them. Everybody knows those indicators were very popular. You're not telling me anything new. But the thing here is like, they work every time because many traders use them. And that's the reality as well. You cannot deny that. It's like everybody, almost everybody that follows technical analysis know those indicators, and they use them because they're very effective in that sense, because of that. So obviously, the RSI, it measures the oversold territory and the oversold territory and the overbought territory. So right here, if you want to buy the Nvidia stock, obviously at the bottom is the best time to do it. So obviously you take a look at the area that is like 30 or below, and you buy the stock right there, or even you see a bullish divergence, which means the RSI indicating like that is going up and the price action going down, and you have the best signal, especially in weekly charts. It's like for swing trading, you can use the daily, the weekly, the 4-hour chart. These three time frames are the best. So obviously this is my opinion, but for swing trading they usually work best. Obviously you go to 5-minute chart, it's gonna be more difficult for swing trading, maybe monthly chart is like the long-term frame. So obviously when you buy the stock and you buy it at the bottom, right here the risk is automatically minimized, and it also works when you are trying to sell the stock. So right here at the top, when it's trading at the highest levels of the RSI, you close the position out, and you realize the profits for sure. Obviously the difficult part is when to do it, because right here, and especially in huge uptrends, it's gonna be difficult to find the better spot. But obviously, look at that. This area a good time to sell, this area a good time to sell the stock, and this area a good time to sell the stock as well. So obviously, you need to find the trend. If you think the stock is going up because the business model is working perfectly, and you see that it's in the top, you can realize some profits, and you can buy the stock once the correction has finished. Like here, when at $11, you buy the stock again, and then you do the same at the top of the RSI again, and so on and so forth. So obviously that's the strategy that many traders use them. It's simple actually. You only need discipline and to follow the trading plan. But as I mentioned before, you have to combine this strategy with the support and resistance level. You have to combine it with the financials, because the financials are the most important factors. Analyze that data. And then we have the forecast, because the forecast, we have analysts from Wall Street, and they analyze the stocks, to give like an estimate. And then we have the reported earnings, okay? And you may say, okay, they are not fortune tellers, maybe they are not right. Actually, they are not. You can clearly see right here the estimate and the reported. It's not the same every time. But the thing here is like, we have like in this example, let's see actually the forecast right here. We're talking about like more than 56 analysts from Wall Street, and they give all of them, they give the estimates, and this is like the average of the data they give. So obviously you have to analyze the estimate, the reported, see the trends. So obviously Nvidia is like one of the most successful examples, and it's going up every time they release a quarter, because they beat the estimate. And that's the explanation. It's like the reality is better than the estimate, so the stock goes up, because the net income is better than before, more than the estimates, so the price goes up quickly. And this is what happened with Nvidia. You can clearly see it. And the opposite can be true. For instance, we have here an estimate of 0.64. If the reported earnings is like that is going to be released, let's imagine the case, okay, is 0.40, we're talking about like the worst quarter in the last year. So obviously the stock will correct, and probably hard, even though the stock is very popular, it has a lot of hype, but you will experience a correction. Why? Because the smart investors, they don't tend to follow that. It's like if they see something wrong about the stock, they're gonna close the positions out and they're gonna invest somewhere else. This is the reality. We have a lot of investors, but smart investors, they are actually the ones that are making money. But we have a lot of traders, a lot of other participants that are buying a stock, they hold it forever, and they see the stock in minus 90%. Smart investors don't do that. They don't tend to hold the position forever. And actually, I'm gonna show you an example. It's gonna blow your mind out. It's like when we see like Nvidia. Let's go to the logarithmic scale. We're talking about, look at what happened back in 2000. Look at what happened back in 2007. We're talking about the stock going down, Nvidia going down minus 91%, almost 90%. So obviously, that's a huge risk. If you have millions and millions or even billions, you will close the position out before that happens. If you see a signal that makes you wonder if the stock is worth it to hold it, they don't hold it, they just sell it. If they see a minimal risk, an important risk, they close the positions out. We're talking about wealth investors, very wealthy. You as a retail, you can hold it, and maybe you lose, I don't know, $1,000, $10,000. It's not that much, but for them it's a lot, and they minimize risk. And these guys, they can move the price whatever they want, because they have a lot of volume. They can create a lot of volume in one stock. Okay, so I'm going to tell you right now another important factor as a swing trader, and I was showing you that the logarithmic and the linear scales. So when you are analyzing a stock, I recommend you to switch this mode. It's only available maybe on TradingView, maybe other platforms. And we have a link in the description below, so you can get like this plan. And they have professional plans that are really, really great to analyze the stock. And when you activate the logarithmic scale, you can clearly see the truth. And look at the uptrends that you can see with NVIDIA. Look at that. We're talking about support level from 1999 till 2016. I mean, that's amazing. You cannot see that from the normal chart. Actually, I don't see anything. So obviously, in stocks with huge growth like this one, the logarithmic scale is the one you should use, because you can draw all these lines, the channels, more patterns, and maybe other stocks such as, I don't know, AT&T with like more sideways trends, because they have dividends or so on and so on and so forth. Maybe you can activate and deactivate the logarithmic scale and you won't see so much of a difference. But here in this example, it's very clear that the logarithmic scale, it works wonders. Okay, I'm gonna tell you another one because we're talking about patterns. And here we have more patterns. I'm gonna show you another example. We're talking about triangles, head and shoulders. They are very, very popular patterns, and it also works. We have support and resistance levels, and I'm going to draw some of them so you can see them. You know, obviously support lines is very simple. We're talking about taking you have to connect all the levels. You know, they have to connect the price action with that resistance level as much as you can in order to draw an important resistance level as this one, you know. But also we had triangles, and the triangles you had to draw it like this. You had to connect the dots, you know, the same areas as much as you can with the bottom areas as well. So in this example, we have a clear triangle right here that is going to break out somewhere. And normally, the breakout, it happens like in the same size. So for instance, if we see a breakout about $84, we're talking about this area between 120 and $60. So probably the stock, if we see a breakout right here, it could go up to this direction. Normally, this is the theory. But you need to consider that, you know, because there is like some sort of accumulation process, like where we have buyer bullish investors and then bearish investors as well, fighting each other, finding the best spot. And when they when one of them loses the battle, they close the positions out and you know, and finds the best area to do that again or to follow a newer strategy. And this is when they create like a huge move, you know, like this one. So this is normally the case. This is the theory. You obviously have to analyze different stocks to see the patterns, but triangles are very popular along with support and resistance levels. And then we have the volume profile, one of my favorites actually. When you draw the volume profile on the area, and I'm going to show you how to do it. Right here you can clearly see the volume profile. This is like where the most trading activity takes place. So here in this example in Alibaba, we see all the volume activity at $73. That means this red line, when they call it the point of control, is like when they have like the most volume trade area, the price tends to go to that direction, you know, unless they see a breakout. For instance, if the price goes above $100 and we lose all this trading volume area, here we don't have so much of a resistance, you know. If they create all this volume area and they win, you know, we're talking about those who are buying the stock. Here there is no resistance at all, so the stock could skyrocket to that direction to $300 easily, you know, in comparison to this area. So obviously this takes time, but you have to analyze closely the volume, and to do that, it's another indicator from TradingView. It's like we activate the volume profile right here, the fixed range volume profile, and we select the area right here, you know. So for instance, we're talking about the minimum levels established back in October 2020 till today. So obviously the most volume traded area is right here below. And you can do that for the long term. So obviously the more data you take, the more volume you will see. So obviously if you resize the data to here, the data is going to be, you know, a little bit different clearly. But obviously we're talking about trends. So maybe these type of investors between 2015 and 2020, they are not the same. If we're talking about the latest upturn, if we're talking about the like this bearish upturn from 2020 till today, I would say that's the new upturn. But that's another theory. You can select the data you want based on the needs, on the analysis that you want. You know, it's like this is the key takeaway. Okay, so I think this is it for today, guys. I hope you enjoyed the video. This is very basic stuff, but it really works for the long term. You can use them. You can use it to yourself. You can analyze different stocks, such as the ones that I analyzed. Hope you liked the video. Remember to subscribe to TradingST and see you in the next one.